Good morning, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is December 8th, 2012. Lots to talk about, so let's get started. First of all, thank you very much for those comments that you guys have been leaving and hitting the like button. I really do appreciate it. Just to update you guys on the monetization of the videos. Doesn't look like it's gonna happen. I reached out to the company that I do my analysis videos with, the software that you're seeing now on your screen, and they said they're gonna talk to their legal department and whatever. I'm not sure. I haven't heard back from them ever since, so I don't think I'm gonna be able to monetize these videos. But it was worth a try. But thanks for supporting me on that. I appreciate it a lot. And to add to this video, we have some noise outside from people who wanted to decide to wake up the neighborhood this early in the morning by mowing and cutting the grass in their backyard. It's very irritating, but I hope you guys can hear me okay. If the noise overpowers my voice, then what I'll try and do is redo this video at a later date, but I wanted to at least get this video out to you guys as soon as I possibly can. Okay, so let's get right into it here. So this is the chart of the SPY, which is the ETF that tracks the S&P 500. And just for your newcomers, I just wanted to let you know the reason why I do my analysis is on the SPY rather than the S&P 500, even though the SPY is just an ETF that tracks the S&P 500. It's because we have a good indication of volume here, and volume is very important in my trading analysis. It may not be for yours, but for me personally, it has a big play in it. And if you go back maybe a few videos, I constantly talk about how important volume is and yada yada yada. I don't want to really get into it in this video, but when it becomes more apparent, then I will definitely let you know. Actually, in today's video or this morning's video, I may actually touch on it just a little bit. Okay, so let's just dig right into it. And again, I really appreciate you guys' comments and, hitting the like button and all that, taking the time out of your day to watch these videos. I really do appreciate it. So let's take a look at this bottom trend line here. We have this pivot point here, and we discussed this bottom trend line here last week. And interestingly enough, we created two doji candles, but I did mention that I didn't know if it was going to reverse or not. You could actually take a short if you wanted to, and then just stop out if you get a close above the 50 moving average and a validation above of that close, and then you stop out and you wait until you get into this 144.07. Well, had I done that personally, and again, I'm an honest guy, or I try to be at least. I don't make any money in these videos. I don't ask for membership or anything like that. Simply subscribe, and that makes me feel better. But in any case, I didn't take this trade. A lot of people did, and congratulations to you guys who have taken this trade, because what would have happened was you would have taken this trade maybe around this area here. Of course, on Monday we had this big jump. Let me just zoom in here. We gapped higher on Monday, and then we just sold off, and then the next day we sold off again. However, that was last week in last week's video. A lot of people who didn't take the short trade, say on Friday of last week, and took the short trade on Monday because of the engulfing pattern, or so-called engulfing pattern. And when I say a lot of people, I don't know if you guys did or not, but I know a lot of people out on the internet that I've been reading has taken this trade. Everybody started blurting out engulfing pattern, bearish engulfing pattern, and it's just, and when you have a doji candle with an engulfing pattern, that just strengthens it. Now, the problem I had, and the reason why I didn't take this trade, was simply because the engulfing pattern wasn't solid enough for me. All of you who watch my videos know that I'm a cautious trader, just because, back when I first started, I lost a lot of money, and I kept losing money. I just didn't know what the problem was. I knew that technical analysis overruled, or was better, in my opinion, than fundamental analysis. I guess you could combine the two, but you need to have technical analysis, because really the bottom line is what the majority of traders are thinking, what their emotional standpoint is in the stock market, not what yours is. And it really, yes, the news has an effect on it, but by the time you get the news is, it's old news. You know what I mean? Unless you pay thousands of dollars to subscribe to a news for Wall Street, where you would get the news first before everybody else, then maybe. But as far as it is now, Bloomberg, MSN, and all those people, we get the news last. In fact, it was pretty interesting because when they had that earthquake in New York, um, we watching this watching the daily, how should I say, day trading the charts. I actually knew something was happening because we had a huge, drop in the markets 10 minutes later. I figure out why, because then the news comes out 10 minutes later, so that's 10 minutes too late. Okay, I don't know if that made any sense. Anyways, I'm babbling again, I apologize. The reason why I don't see this as a valid engulfing pattern, and again, this is just my opinion, because on a technical level, this may be considered an engulfing pattern, because not only did this whole body engulf the body of this candle, it engulfed the whole entire candle itself, which is fine. So it's maybe on a technical level, it is an engulfing pattern. An engulfing pattern is a two candle reversal pattern after an up move. So we have this up move, we have the engulfing pattern, which Monday's body engulfed the whole Friday's candle, which is technically an engulfing pattern, in which case you expect a reversal, and we see that. However, why didn't I take the trade? Well, you guys know how I trade, right? I need at least 3 days before I consider any move an up move, right? So we kind of got that. We got this one day here, we got 2 and 3, and again, this day here was also an engulfing pattern here, but that would mean that we would have this as a down move and then this as an up move. You got to remember now, engulfing patterns are reversal patterns. Okay, so this here is not a reversal pattern. We went up, we kind of consolidated, we had an engulfing candle, right, or so-called engulfing pattern, and then we went higher. We didn't come down, have an engulfing pattern, and then go up. So you just have to remember that. So I also didn't consider this an engulfing pattern either, but technically maybe in the books it does, but just in my opinion it does not. So that goes the same for here. I mean, we went up, we consolidated, and we went up again. This is not an engulfing pattern because there was no up here. You see that? You see, I mean, it kind of was up a little bit, but you're talking about two candles here that are just like kind of level across from each other, and you have just one candle here. So to me, it's not a solid reversal pattern. Okay, in addition to that, now touching on volume, if you look at the volume on that Monday, which was this past Monday, look how low this volume was. It was actually lower than the past 3 days, not high. Normally you see it higher than the previous day, or higher than even the last 2 days, and what would have liked to see is higher than the last 3 days, because you guys know the magic number for me is at least 3 days. So we need at least 3 days of an up move to consider that an up move before a reversal pattern can take place, or whether it be a single pattern or a double candle pattern. And we also need higher volume than the last 3 days before I'll consider it. It was very tempting, don't get me wrong. And yes, the fact remains that on Tuesday the downside continued, right? And it actually, if this was an engulfing pattern, in my opinion, then this would have validated the down move, and I would have waited to sell, to cover my shorts at 139.21. But because I didn't take the short, because of that, because of the lack of that volume, and the lack that it wasn't an up move considerably, I should say. Maybe I take that statement back. It needed to be a considerable up move. For example, if you look down here, right, we have this hammer candle looking candle here. It's not really a hammer candle, it's more of a spinning top, but in any case, it happened on higher volume. We get the reversal, right? We come all the way up. You see this candle, this green candle here? Say we had another red candle that just comes out just like this. Okay, now imagine that this is a red candle. Please excuse my drawings here. And it was right into a nice upper trend line resistance point. This to me is considered a reversal. We had this long up move, and then we have this engulfing pattern, in which case I would have thought that it would have potentially had a reversal. Okay, so that to me is what a reversal is, as far as an engulfing pattern or any type of reversal candle pattern, whether it be a shooting star, because it's going to be up here in this area, a doji candle, or an engulfing pattern. I trade even sometimes harami patterns. It really depends on the amount of volume we get. All right, so after Monday we come down, so it does turn out to be a valid quote unquote bearish engulfing pattern. We do close below that day on Tuesday. But then look at what happens on Tuesday. Tuesday actually creates somewhat of a doji candle or a spinning top candle, and it happened on higher volume than, believe it or not, higher volume than Monday. So I mean, it wasn't very much. I mean, let's look at Monday. Monday was about 124, and then Tuesday was about 127. So it really wasn't much at all. Fact remains, this candle was a higher volume than that, and it wasn't a big down move candle. It was more of a doji looking candle. Then on Wednesday we look at this candle. This candle is more of a spinning top, even more of a doji candle, because look how long the tails are. But look at the volume. Isn't that interesting? On Wednesday we had higher volume than the past 3 days. You see that from here all the way here. Past 3 days, that's valid, but we don't have this down move here. There's one candle, two candles, and then we create this doji. It doesn't constitute a reversal for me, even though that there's volume there. Also, in addition to that, I don't see any support levels here. Well, there's pretty good support because we are in this consolidation area. Any consolidation area will be support or resistance, but it's not very strong. You see, it's kind of just trading in a sideways kind of pattern, leaning a little bit higher. Basically, what it's doing is it's riding up this upper trend line there. Okay. Now, on Thursday, we create this kind of a regular candle. We go right into the 50 moving average, and well, yes, the 50 moving average is going to be resistance, but not really, because it actually closed above the 50 moving average if you look really closely there. Okay, and then the next day, which is Friday, we actually close higher. So now, a lot of people, let me tell you something. I mean, you guys got to be really careful out there when those internet people are saying, they validated, they confirmed the down move by closing the day before, closing lower than Monday, right? And everybody's saying, oh, this is an bearish engulfing pattern, short, short, short. Yeah, you would have probably made money, don't get me wrong. I mean, I'm not faulting anybody for doing it, but you see how much down movement we actually got. It wasn't very much at all. And these are the reasons why I don't take these trades, because I want to make sure that the best odds are going to be in my favor. So I'm going to look for patterns and for things that are going to give me those odds. And even if it goes against me, it won't hurt me as much, because I'll be either with the trend, or I'll have a lot of support or a lot of resistance in certain areas. So again, I'm stubborn, right? And sometimes it's good to be stubborn, because I'm telling you something. Back in the day, I just had to be in a trade. No matter what I did, I absolutely need to be in a trade. For whatever reason, that excited me. But that's what got me in trouble. Patience and discipline are the two things that in my opinion, any trader needs to have to be able to trade successfully, because of the way the markets are. I mean, so I want the best. Probably at least 90% of what I'm looking for needs to be what I see before I even consider taking the trade. And sometimes I don't even take the trade based on, maybe I'll take back what I said about fundamentals. But if there's news out there, and big news that's going to happen tomorrow or something, and I see a perfect pattern, I may actually step away and just let it kind of settle in first, before taking a trade. And of course, anything to do with earnings. You guys know I don't play earnings unless I play the straddle or strangle on the options play. But you guys also know that I gave up options a while ago. So that's not to say I may not jump back in, because I feel like I want to gamble a little bit. But again, this I don't see this as being a gamble. I don't see this as Las Vegas, because let me tell you something. It's going to be a lot more fun for me to go to Las Vegas and gamble, versus playing stock markets and seeing my money just disappear. In any case, back to the charts here. Okay, so basically right now, am I saying that we're gonna go up, or we're gonna go down? Okay, so that's the question all of you are probably wondering, of what I'm thinking about. I'm still gonna wait for this 144.07 to be tagged, but because we already had this down move here, I mean, if we went straight up into it, then yeah, I probably would have taken the short. But because we had this down move already right below the 144.07, then I may actually wait for the 144.30, or possibly even this upper trend line here, before taking another short trade. To be honest with you, this is still a downtrend. Okay, nothing has changed. We didn't create a higher high. and we haven't created a higher low per se yet. I mean, we have a low here, we have a higher low, so we could potentially start turning over. Okay, that's a potential. When I see this kind of pattern where you have little pivots here, not very big pivots, but we have little pivots here, that could turn out to be a bigger pivot, and we may get a pullback, say on the 144.30, and then reverse back up into the 145.07, come back down, retest resistance, which is now support, and then continue higher like that. That's definitely a possibility, but that remains to be seen. So does that mean I am bullish short term? No, that doesn't mean I'm bullish short term. So does that mean I'm bearish short term? Well, we are into resistance. We did create this doji candle, but the doji candle was not after a significant up move. Okay, so that's one thing, and also this candle, it didn't do it on very good volume. Okay, I mean, it's better volume than Thursday's candle, but it's definitely not wow kind of volume. You know, maybe like this volume or this volume. These are wow volumes where it really stands out, right? It really stands out. In any case, so backing up a little bit here, I don't see this as being a reversal pattern. What I do see is that we're just riding up this trend line here. So it could potentially ride it all the way up into the 144.07 before turning over, or we may actually start turning over now. Okay, why do I say we could start turning over now? Because this could potentially considerably, sorry. Anyways, this could be an engulf, I'm sorry, a consolidation pattern. You see that? A down move, and then we consolidate. We haven't closed above this candle yet, here yet, so there's a potential that we could still pull back. Okay, keep that in mind. I do not trade consolidation patterns. Every time I trade consolidation patterns, I always get burned. But to be honest, I mean, you see consolidation patterns all over the place, and they all pretty much always play out. But just for me, I got a lot of bad luck. Whenever I pick a consolidation pattern that looks perfect, for whatever reason it goes against me, and out of the 100 consolidation patterns that I see that actually go in the direction that it should go, I'll pick that one that doesn't. You know what I mean? So it's just, everybody has their own preference in trading. Everybody has their own tools, their own ways of trading. That's just, not my way of trading. So what I do with consolidation patterns is, though I'm aware of them, I see them, I know what the potential move could be, but I just do not make a trading decision based on that move alone. Okay, so what is my next step and what do I see? Well, here's the thing. Make a long story short, on Monday we had this down move here. We had a gap up and we have this down move. Okay, so we're obviously going to get some resistance from Monday here, which is actually what we got. But what we want to see to validate anything, basically right now, I'm just going to tell you I'm not taking any trades right now until I get into good solid support or good solid resistance. But what I want to look for to get ready to short is if I get a close above the high of this candle here, which is Monday's candle, and then another close above that candle is high, then that will validate that this will continue higher into the 144.30 level. Okay, if we do not, and we are unable to close above Monday's candle here, then that will show a lot of weakness to me in the stock market. Basically within that week now, so from Monday through Friday next week, if we can't even close above this guy here, we kind of just drag to the side here, that's going to show me a lot of weakness, and there's a potential that we could fall. Okay, so just keep that in mind. Now on the downside, what I need to see is a close below and a validation below this close here, meaning it needs the market needs to come and be able to close below this candle here, below the low of this candle here, and then validate that with another close on the bottom here. The problem I have is we have the 50 moving average right here, we have the 20 moving average right under it, we have the 200 moving average right below that. So there's going to be a lot of support around this area here. That does not mean that it can't pierce it. If anything on the news, you got that fiscal cliff or whatever, blah blah blah. To me, that's just babble. To me, that's institutional game playing. Okay, that's what they do. That's what they like to do to control the markets. They use the news, and that's why you see a lot of volatility in the markets today. Just be patient. In my opinion, I'm just going to be patient. I don't want to tell you guys what to do. I apologize for saying just be patient, but because you guys are obviously very good traders. But I'm going to be patient until it hits my level here, because that would still be a pretty solid level, because we also have this upper trend line here, which is pretty nice. That's not to say it's not going to pierce through this and get to the 145.07, but think about it. Had I taken a short trade here and where where I was talking about here, where we had pretty good resistance, where we had this upper trend line, we had this 50 moving average. Had I taken the trade here, I would have been already losing money. Okay. Of course, I would have had a break-even stop, but it would have been a wasted trade anyway, so it wouldn't have really mattered to me. Or, because I wouldn't have stopped myself out or taken profits that early. In any case, I hope I explained it correctly. But let's move on. Geez, today must be just my babble day. Okay, so try not to babble anymore and try not to have a long pause, but I'm just going to say that this is the US dollar futures chart, and as we all know, dollar up, markets down, the dollar is going to be inverse to the markets. For you newcomers who are just watching this video, just realize that it's not tick for tick. I'm sorry, it's not by price, it's tick for tick. Okay, so if the dollar starts pulling back, then you're going to notice that the markets is going to be start catching a bid. If the markets start pulling back, and then you're going to see the dollar catching the bid, and it's vice versa. Basically, what the Feds and institutions like to do is they like to sell the dollar or devalue the dollar by printing money, obviously, whether it be QE 1, 2, 3, or whatever, Operation Twist or whatever. And when that devalue of the dollar goes down, that props the markets higher. Okay, there's a lot of technical jargon behind all that, but basically the bottom line is when you see the markets up, the dollar's down, and vice versa. This is the US dollar futures. Okay, so there's a lot of lines in here. I wonder if I updated this chart. No, it's on my other computer. But don't pay attention to these lines so much. What you want to pay attention to is that, well, this mathematical calculation held up pretty well at the 81.26 level. That means that's going to be solid resistance again, at least intraday. Okay, so keep that in mind. If you're a day trader and you want to short the dollar at the 81.26 level, that wouldn't be such a bad idea. I would probably wait until the high of this candle there though, just to be safe, and that is 81.52, or I would just say 81.50. Okay, but if you're a day trader, then 2 cents doesn't make a big difference, so just keep that in mind. Now we have this beautiful shooting star looking candle. It hit the 200 moving average, it pierced through this upper trend line and hit the 200 moving average before pulling back, and then we have this 20 moving I'm sorry, this is a 200 moving average, if that's what I said, but we have the 20 moving average right here, which it totally ignored. Like, it really didn't care about that, but it went down into this 50 moving average, which it did care about, and then got a small bounce off of that. So intraday the dollar was having a lot of fun there. So what does this tell me? This tells me that this is more of a shooting star pattern. And check it out. Look at this volume. I mean, this volume is just crazy high. Okay. Now, provided these charts are being accurate for me, sometimes charts aren't 100% accurate. This is telling me that there's a potential of a reversal. Why? We got 1, 2, 3. Well, we only got 2 days. I apologize. This would be the third day. We actually need 3 days in order to make a move this high. But because the tail is so long, and we went right into the 200 moving average resistance, and we're right into this area here, that tells me that there is a maybe more 51% versus 49% that we may start seeing a pullback. Now, this 50 moving average may hold up, but the 20 moving average is lurking, and we also have the 200 and the upper trend line here. So it all depends. It's kind of murky right now to really say, but right now it looks like the dollar may start pulling back. Now, if we all know, if the dollar starts pulling back, guess what? We're going to have a catch a bid in the markets. But again, yes, we have the candle reversal, we have the volume, we just don't have those 3 candles just yet. So I can't really say that it's going to reverse. I can only apologize and give you a 51% out of 49 that there's a possibility that it may start pulling back. One thing you want to keep in mind, and this is very important, the trend, right? We have a low, a higher low, and what do we have again? Another higher low. This tells me that there's a potential we may get another higher high, because we have a high, we have a higher high, and another higher high here, and so there's a potential that we may actually get another higher high, which means the market should drop a little bit more. Now, just keep in mind, again, the dollar is not by price. So if you see the dollar shoot up, $10, you don't expect SPY or S&P 500 to drop $10. It's tick for tick, okay? So the dollar could go up $10, and you see a large spike, you may see a pullback of 20 cents or something like that on SPY. There's no exact calculation for it. All you have to know is that when you see upticks in the dollar, then you should expect a pullback on the markets. But this is another reason why that there is a potential that the trend could change. Okay, so just keep that in mind. The trend could change because we have this candle here. This could actually be the high, right? If this turns out to be the high, now we have a high, and then we'll have a lower high, and then so we're going to expect another lower low. But is that guaranteed? Obviously not, because we could actually start trading sideways because it is a holiday season, and with the holiday season, volume is just not going to be there. Okay, so just keep that in mind. Again, the trend on the daily chart may start reversing, and it would make sense because, like I said in the last week's video, the SPY, this is the chart of the SPY weekly chart. This is actually still in an uptrend. Okay, let me delete all the drawings. We have a low, we have a lower low. I'm sorry, a higher low, and then we have a high. We're just waiting to see if there's a possibility that we get another higher high. Actually, we had already 3 higher highs. So yeah, you just keep that in mind that we are still weekly in an uptrend, and we are above the 20 moving average on the week of last week. So there's a potential that we could go higher. So just keep that in mind. And if we do go higher, like I've been waiting patiently for, then we would be counter trend trading if I take a short at those levels that I was showing you, the 144 level, because the trend would actually be up and not down. All right, the weed whacker is getting closer to the house, so it might start getting really hard to hear. So let me just switch this over here. All right, this is a chart of Apple. So as you can see, these calculations have been holding up. I am going to start redoing more calculations. If I see anything that looks crazy or looks good, then I'll definitely update you guys on that. So don't worry about that. But right now, Apple just looks range bound to me. If this is a pivot here, then you can expect probably maybe the 598.86 to get tagged before a small pullback. So just keep that in mind. I don't see any significance in Apple right now, though Apple is in a weak state. Okay, we have a bunch of highs here, of little pivot highs here. Well, let's just say that this is a high. Now we have another high here. We have a low, so there's a possibility we may potentially get another lower low. We have to wait for this pattern to form. If we start trading this way, then this is just a bearish pattern, bearish consolidation pattern, and we could potentially drop even lower. This 5.1138 no longer stands, as you guys all know. Once it's used, it's abused. So once it's tagged, I don't trust it anymore, and I just let it fall through. But the reason why I keep these calculations here is simply because it will be a resistance. Okay, so if we break down and we start, catching a bid, then the 5.1138 is valid, but in the opposite direction. All right, with that being said, I'm into 27 minutes. I was just wondering if you guys wanted me to do a little bit more stock analysis rather than just the markets. It may, and I'll probably zip through the markets a lot quicker, so I'll be less detailed in what I'm thinking about in the SPY. But if you want me to look at other stocks, individual stocks like AMD, which is on the cheaper side, or like Apple or IBM, and the more expensive stocks, I can do analysis on those too. So if you guys are more into me doing analysis on those instead of just on the SPY and the dollar, let me know and I'll be happy to do that. Right now I haven't been doing gold or silver simply because they're not creating very good patterns right now. They're all over the place. The patterns aren't very good. They're kind of range bound. You can play the range bound if you want, or the range if you want in the GOD, but in other cases or in other stocks or maybe even other ETFs, let me know. Post a comment if you want me to start doing more stock analysis. Meaning, what I'll probably do is pick maybe 10 stocks that look good, and I'll pick 1 out of 10 and I'll post it on here and see how it turns out, and then we can just follow it. I wouldn't say make trades against it, but maybe just kind of see if the analysis turns out to be good or not, and I'll let you know if I actually take the trade or not in any individual stocks that I do an analysis for. Again, thank you very much for all the likes, and thank you very much for those kind comments that you guys have been posting. I really do appreciate it. thank you very much for stopping by and taking the time out of your life, your busy life, especially in the holiday weekend, just to watch my videos. It's awesome. You guys have happy holidays. I hope you guys are on vacation, spending time with your family. I don't know if you guys are actually out there trading, but in any case, God bless to you all. Thank you very much. Good luck to your trading next week. And again, if anything does change dramatically, I will post another video. I haven't been doing that because I haven't seen anything dramatically change from my weekly videos. So, but when it does, I will post a video to let you guys know of anything that doesn't look so good. Okay, so I hope to see you in the next video.